Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, this is James Thompson from the BuyBox Experts podcast. Today's episode is part of a special series of interviews that we have done to dive deeper into the recent phenomenon of private equity companies and FBA aggregators investing in private label brands that are leveraging the Amazon sales channel. As part of this series, we interview a wide range of investors, brokers, consultants, and entrepreneurs that have recently sold their private label brands. We peel back the layers on what's happening in this new investment space and look at how private label brands are finding financial success through the building and eventual sale of their online businesses. For 3 weeks, from mid-February through early March, we will release a new episode every weekday on this topic. Sit back and enjoy today's episode. Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I'm co-author of a couple of books on Amazon, including the recent Controlling Your Brand in the Age of Amazon book. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. We also support investors with due diligence services. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to do a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line from month to month. Check out disruptiveadvertising.com to learn more. Our guest today on the BuyBox Expert podcast is Gnesin, CEO of Recon Brands, a firm that acquires, launches, and operates a portfolio of e-commerce brands centered around Amazon. Prior to Recon Brands, Ryan was a commodities trader and financial planner. Ryan, thank you and welcome today to the BuyBox Experts podcast.
Thanks very much. Great to be with you, James.
I want to start, Ryan, with an obvious point. FBA private label businesses are a hot commodity these days. What has happened to generate this recent interest in such businesses, which have been around since the start of the Amazon marketplace?
Yeah, it's a fair question, James. You know, I wondered that question when I first joined, right? So, you know, I first started looking into Amazon. I left my old commodities trading world in middle of 2016 and moved to the US. And, you know, at the end of 2016, I started really looking into what I wanted to do next and came across, you know, Amazon and the opportunity. I had a friend who was selling on Amazon and I thought it was very intriguing, but I also found it surprising when I went to a couple of Amazon conferences at the noticeable lack of sophisticated, what you would call sophisticated capital, right? There were no investment bankers. There were no private equity guys. I wasn't seeing many management consultants. I just wasn't, you know, it was almost as though it was like a Wild West mom and pop type of environment, right?
Yes.
And you know what I'm talking about. And I found that surprising because when I was talking with some of these people, there were people who had serious businesses. I mean, you know, I had this friend of mine who started his business and within 2 years had a $10 million business on Amazon, right? And I mean, that's impressive in any industry, right? Mm-hmm. And so I found it surprising I just found it surprising at the time. And at that stage, I think e-commerce penetration was under 10%, right, of total retail, and it was clearly growing. I mean, it was growing at around 1% a year. So the trend was there, the market was growing, but there were tons of horror stories. You know, in those days, you know, it was very, very common to have your Amazon account shut down. I mean, anyone who'd had an Amazon account for like a couple of years, like had a story about their account getting shut down. You know what I mean? And by the way, we've had our account shut down a couple of times too, just being caught up with the algorithm and, you know, some mistake that Amazon made and we had our account shut down. And the other key factor was that, you know, it was against terms of service to own multiple Amazon accounts, right? And there were all these horror stories about people who would be sitting in the same Starbucks even if they had two different Amazon accounts, and Amazon would think, oh, because you're using the same IP, right, to log into your Amazon account, you must therefore be working in the same office together, running multiple accounts illegally. And so Amazon would shut down accounts, right? It was happening all the time. And so, initially when we started looking into this sort of aggregation play and roll up, like it wasn't possible because you couldn't own these multiple accounts working from the same location. There was all these reasons why we felt it was too risky a play, which is why it took us 3 years to finally decide to make the plunge. So I mean, so I mean, that's one of the reasons why I think it's become much more popular now, because Amazon has solved a lot of those issues, right? I mean, now you can have the multiple accounts, and e-commerce has obviously continued to grow tremendously. I mean, obviously we've had this massive step change this year. So there's a number of reasons, and I guess COVID's just accelerated everything. I think this was always going to happen, but COVID, as the expression goes, right? I mean, decades. Sometimes nothing happens for decades, and then decades happen in weeks.
Yes.
I don't know who said that. Someone said that. I think it's been attributed to Stalin, but I'm not sure who said. Anyway, it's clear now that what's happened is that it's just this trend that was going to happen over 10 years has just happened over several months now.
It's fascinating to think that for so many of these private label sellers, they've been bootstrapping it for years, getting friends and family to kick in money to help grow, because traditional banks often weren't excited about the FBA model. Now you've got all these investors that are happy to come in and buy the whole business. And quite frankly, there's so much money entering the space when it comes to acquiring businesses. It's not lending money, it's actually acquiring the whole business. It's kind of a fascinating turn of events for folks that are used to making a good living running these businesses, but now are in a position that they can exit and make potentially life-altering amounts of money selling their baby. So with so many companies now interested in buying and rolling up FBA businesses, I'm curious your perspective on what's going to happen in the next 2 years as so many new aggregators rush in. I think of simple supply and demand, but I'm also seeing a significant tiering of different sizes of FBA aggregators going after different types of private label businesses. So tell me more on your thoughts there.
Yeah, so it's going to be really cool to see what happens to the market. So the first thing I would say is you're absolutely right. I mean, there's been a ton of activity here. I mean, I heard some numbers earlier today that there's been something like $700 million of equity that's been injected into the space this year for roll-ups, and something like $2 billion of debt. So there's a lot of liquidity in the space. But what that means is that's great for sellers, right? Because your FBA business has, number one, it's obviously grown as a result of COVID, but also there's more guys looking to buy the business.
Yes.
But what that also means to me and suggests to me is that there's just going to be more sellers entering the space. So when you talk about supply demand metrics, yes, there are more buyers coming into the space, but a lot of the sellers then, when we've bought their businesses and we ask, what are you doing with the money? They go, well, we're going back to start a new Amazon business, right? I mean, we've just been so successful in this one. Why wouldn't we go do it again?
Right.
So there'll be more sellers coming into the space, and it's the beauty of the Amazon flywheel, right? I mean, this is the beauty of it. More sellers means more customers, and more customers means more variety and lower prices. Right, and that means more aggregators, and it also means more sellers, and the flywheel just goes round and round and spins faster and faster, and we're all living in Jeff Bezos's world now, right?
Jeff, of course, is doing very well from all of this activity, but that's Amazon always wins, as I've come to learn. That
is true. That is true. But I think to your point about the aggregators and how, everyone's got different strategies and everyone's got different criteria they're using to buy businesses, and the market is big enough. I mean, when you look at the numbers, Amazon third-party marketplace last year was $200 billion, $200 billion of GMV, right? This year is going to be something like 280. And according to guys like JP Morgan, there's a report, by 2022, it's going to be well over 400 billion. So, there's room for a lot of sellers. There's room for a lot of aggregators. The whole pie is expanding so rapidly that there's going to be plenty of M&A activity. And, it's a great space to be in.
You didn't grow up as an FBA private label seller yourself. You came at it from the banking side. I'm curious to get your thoughts on the kinds of issues in the space, that have most surprised you as you've learned more and more about the subculture of entrepreneur. You talked about some of the issues at the very beginning of how disorganized or wild west it was, but are you seeing things within the way that the sellers run their businesses that have kind of caught you off guard?
Yeah, I mean, some of the noticeable things initially was, and I came from the commodities trading world, which is, and it was physical trading. It wasn't paper. It wasn't so much paper trading on a screen. It was actually physically moving commodities around the world, putting it on vessels and selling it to Asia or whatever it was. And in that environment, you almost, you like never spoke with your competitors or it was rare, right? You did. Whereas, I found Amazon's environment to be quite collaborative. There's plenty of Facebook groups and there's plenty of forums. And I found it to be a really great environment where people share information and get to know each other and help each other out. And I think that goes towards an abundance mentality, right? Because I think the ones who are doing that are getting the most out of it, right? I mean, those guys are the ones who are benefiting most from sharing information because it's not a fixed pie. I mean, the pie is truly expanding. So that's one of the things that I found to be interesting. Something else that's just so interesting about the space is how easy it is to get set up, right? I mean, that's part of the reason Amazon's just made it so simple for a seller to come in, and with, a few $100 in their pocket. We started our business as resellers. I mean, you can literally walk into a Marshall store or a Nike factory.
Oh yeah.
You can buy a pair of shoes on Nike, set up an Amazon account, and start selling on Amazon. And so Amazon's just made it super easy. And the beauty is just this variable cost structure. So you can go from zero to a $20 million business without ever investing in any real fixed cost overheads. You don't have to buy the trucks that deliver the goods. You don't have to set up the warehouses that inventory the material. I mean, Amazon's just made it so simple and so inexpensive that it's created this great environment.
When I was first working in the FBA team at Amazon, I got to talk to a lot of sellers. And to your point, the low barriers to entry, sometimes that attracts people who think that they can be, the next multi-million-dollar seller, and they really have no business being anything in business. They shouldn't be in business. And so the lack of sophistication sometimes that we run into when it comes to how to figure out whether you're making profit, to look at the economics of your business and say, this is going in the wrong direction, to know if you actually are up today or down today. Those kinds of things are often lost, even today, on companies that do 10, 20 million a year. I mean, they're waiting for their accountant to tell them if they've made any money. That's kind of an absurd situation, but Amazon makes it easy for anybody with any level of business training to get in. Not that they're necessarily going to be successful, or not that they're necessarily going to be up to speed on what it takes to succeed on Amazon, but yes, you can get in and you can start selling product. So it's an amazing place to be, but it's also a very dangerous place to be if you don't know what you're doing.
Yeah, I agree. No, you've reminded me of an expression. A guy, there's one of the guys I've met in the early days when I asked him how his profit margins look and what some of his metrics were. He said, Ryan, the only thing I know is that at the end of the month, my lights are still on. I'm paying my bills, and I have enough money to do that. And beyond that, I couldn't tell you the first thing other than my revenue, which Amazon makes obvious. I couldn't tell you what my profit margins were, what my inventory turnover velocity was. I couldn't tell you any of that stuff. So I agree with you. There's what I like to call a dumb tax, right? And there's a cost of education, right? And you're either going to learn something by making the mistakes yourself, right? Or you're going to learn it by going to a consultant, like you guys, for example, and letting you guys help manage the business. Or you're going to go find someone to teach you the business. But one way or another, you're paying something to someone,
yes,
right? And what I've found the most expensive mistake you can make is by learning from trial and error, right? Because that's the most expensive, time-consuming way to do it. So yes, while it's easy to get in, if you are gonna scale and you want to do it properly, you got to get those things right. And If you don't have the skill set yourself, either partner with someone who has the skill set or go find a consultant or an agency. I totally agree. This is a business like any other business. And, if you don't, for example, know your metrics, it's like flying blind. It's like trying to fly an airplane without your dials and gauges. And, it's a recipe for disaster.
Let's talk about the ease with which companies can enter as an Amazon seller. The marketplace is here to stay. Amazon will continue to tweak its policies, but the continued desire for cheaper, better versions of products among Amazon customers, combined with lots of accessible manufacturing capacity here and overseas, that will keep drawing people into wanting to become private label sellers. How does an investment group like yours leverage that enthusiasm while having to cull through what's worth keeping and what's worth throwing away?
Yeah, when we look at a business, we're looking, for example, one of the criteria we look for is how much upside there is for us to grow the business, right? So, we look at all areas of the company, branding and creative, right? Whether that's videos, better photos, A+ content.
Yep.
We look at supply chain. Is there a way we can somehow figure out how to improve costing? Can we repackaging it in a certain way that's going to be cheaper for us and for our customers? We look at SEO and PPC. Do we think these guys have optimized their title and their description and their back-end keywords? Do we think they've done everything they can? Are there variations we could add to the listing? Size, color, difference? We look at all of those things, even customer service. Is there a better job we could be doing to manage customer service? I'm just plugging in my laptop. I see it's about to go dead. So we're looking at customer service. So we're looking at all those areas, and we, no matter what business we buy, we're going to try and optimize all those different areas and pull all those different levers to be able to, to juice the business as much as we can.
There are thousands of private label brands out there. Mm-hmm. When we think of all the aggregators that are getting in to this space, if you go back a year ago, the couple of companies that were doing this, they were able to rely on brokers as their primary source of deals. Too much competition. Everybody can't be looking at the same deals from brokers. What is your approach for finding deals, and how are you finding companies that might not otherwise be shopping around to be available for sale everywhere and anywhere?
Honestly, today we're starting to get a lot of, for the last few months, we've been getting a bunch of referrals. So people know us in the space. We've been around a long time. We've been to a bunch of the conferences. We've been networking, for years in the space. And so now that people know that we're, one of the buyers and one of the aggregators, mm-hmm. And they know we're nice guys and we're very easy to deal with and we have a good reputation in the market. So, yes. We're getting a lot of that deal flow coming to us directly now. We do some direct outreach to certain sellers, and we have a couple of other, things that we do online. But broker websites is still a great place, to find deals, I think.
What would you like private label firms to do before they go to market? When you think of all the different offers that you may see, I'm sure that they're not all shined up just the way you want.
Yeah.
What are the best practices you'd like to see these private label brands pursue before deciding to sell?
We don't require much. Okay. I'll tell you, in terms of what we look for in a business, mm-hmm. that's different. If it's a great product and it has a lot of reviews, right? Mm-hmm. That's a business that we're interested in.
Yep.
But in terms of how someone packages it up for us, we're pretty easy there because we've got some super strong M&A guys. Our guys have something like, 40 years of M&A experience and billions of dollars worth of deals. So we don't need anything packaged up in a certain way. We're happy if a seller comes to us and says, here's our user permissions, gives us user permissions, lets us pull a couple of reports.
Yep.
That tells us, most of what we need to know. And then it's just simply a question of understanding the supply chain a little bit better and understanding, the cost of the actual cost of goods, right? So like a few invoices of the materials. But we build the balance sheet and we build the profit and loss statement and we do all of that. Even if a broker gives it to us, we're going to rebuild it ourselves anyway.
Of course.
So what we like to say to people is, don't stress. Just let us have access to the information, and then we'll put everything together and make it. We make a concerted effort to make this as simple as possible for a seller. It's typically not a fun process selling a business, right? Particularly if you are going through a broker. If you're going through a broker, there's great value there, but you may talk to 10 different buyers, and that's a lot of, or 20. I mean, who knows? You may talk to more than that, and it's a lot of effort, and it's a lot of energy, and it's a lot of time. And sometimes you don't know if a buyer is serious, or if they have the financial bandwidth, or whatever it is to be able to close a deal. And we make things super simple. We close our deals in 30 days or so on average, and we just try to make the process as simple as possible.
So let's spend a few minutes and talk about Recon Brands. How is your firm differentiated from other firms that are in the same business of buying FBA businesses?
I think we've probably been around for longer than most, right? I mean, a lot of the new guys that have raised a lot of money are relatively new to the Amazon world. Maybe they may have a lot of business experience in general and have successful previous businesses, but maybe less so on Amazon. We've now been in the Amazon game, I myself, for 4 years, and we've learned all the hard lessons, and we've made all the mistakes, and we've had our accounts shut downs, and we know what it means to sit on the phone, banging your head, against the brick wall that is seller support, and not getting anywhere. And we know all those things, and we know the tips and the tricks, and we know the pitfalls, and so we've just been around. And we know the game. And, we were managing a business of, with 8,000 SKUs before we started the roll-up. So we've got a bunch of experience in the space.
Today your team is based all over the world. Are you looking to buy companies that are private label brands from all over the world?
We're only looking at buying businesses that are primarily on Amazon. I mean, sometimes we buy a business that is, let's say 70% Amazon and 30% Shopify, for example, which is fine. So we're primarily focused on Amazon. To date, we've only acquired businesses that are Amazon USA.
Okay.
But we're also interested, from Q1 of next year, we'll be buying businesses in Europe as well. Amazon Europe, I should say.
Yes.
So yes, we plan to go global. Some of our investors are actually based in Asia. So, in my commodities trading days, I was living in Southeast Asia for 8 years. So got a great sort of strong network there, and e-commerce is exploding in Southeast Asia as well. So we see all of it as tremendous opportunity, and it's early days. I mean, we're somewhere between the national anthem and the bottom of the first here, right? I mean, we're early days in this Amazon roll-up story. So yes, global acquisitions and sales is absolutely part of our strategy. Yeah.
Ryan, what do you think is going to make your business successful in the long run?
I always say to my guys, it's never what you do, it's how you do it. And so I think just real focus on operations and execution, right? Just doing a really good job at growing these brands, right? Paying really retail is detail, as the saying goes, right? And just
yes.
And just making sure that you optimize these businesses as best as you possibly can. Creating a great culture for the company, right? Because having great people who, if you're building a big business, I'm not of the view that you micromanage people, right? I always say, you hire people, you hire really smart people so they tell you what to do and not the other way around. So, I believe that if we hire really smart, really great people, give them the resources, give them a great environment with which to work, and a great business model and strategy, then we should be just fine.
For the companies you're buying, how often how long do you typically keep the leadership teams around?
So to date, we haven't acquired anyone. When you say keeping the leadership team around, my team's is super, super strong at managing these businesses. So, we haven't yet had any sellers who wanted to stay on. If a seller wanted to stay on, we could discuss that. We're certainly open to that. And we can learn from sellers as well. But so far, all the businesses we've acquired, the sellers have sort of explained and taught us everything that they felt was pertinent. And, we've stayed in touch with sellers, and they love to see how their brands grow over time.
Yes.
It's a super fun thing for them to see what we do with their business. And one of the businesses we acquired was from an 80-year-old couple, and, the business is up sort of 200% since we acquired it. And it's exciting for them to see what we've done with the business and how we've done. So, so we haven't yet brought anyone on, but from the seller side, but we're open to it.
I'm curious, where do you see the FBA aggregator business going as a whole in the future when these companies start to try to essentially take the value out of the companies they've raised? It's all very nice and well to have a $500 million valuation, but if these are all privately held businesses, what do you think will be the way in which investors will be able to get their money out of the aggregator businesses?
I think you'll start to see some of these businesses IPO. I mean, I don't know this, but I mean, I wouldn't be surprised if you start to see some of the bigger aggregators IPO, right? There's no reason for that. And I don't see any reason why that wouldn't happen. And then I think you're going to start to see the aggregators aggregating each other at some point, right? I mean, that may start to happen. I mean, I think it's already starting to happen to some degree, but I think that's going to start happening to a greater extent in 12 months' time. So
one of the fascinating stories that has yet to be told is what happens when one of these aggregator businesses buys a brand and it doesn't work out. Do they try to sell it on the secondary market? Do they just write it off and move on? Who's going to buy those brands?
I guarantee you, anyone who's buying dozens and dozens of businesses is going to come across one that doesn't work, right? I mean, it's going to happen.
Yes.
Touch wood, it hasn't happened to us yet, right? I mean, one of our businesses we acquired, and then it dropped by 50%. In fact, our very first business we acquired dropped by 50% within the first couple of months. And that was more to do with there were a few factors. Partly was our fault, partly wasn't our fault. We've since recovered that, and it's now way, way up from where we bought it, right? So, I mean, we recovered nicely. But it will happen. And when it does happen, I guess part of the strategy here is that you have a diversified portfolio. So, I mean, it shouldn't kill the business unless you do it on several of them.
Yes.
And, it's rare that you would discard a business. I mean, there's, you would have to have a pretty compelling reason to do that, where you just felt like there's just nothing you can do to this business to help it grow. But if you have some skill on Amazon and the market is growing, I mean, if the market happens to shit the bed, right, for that particular niche, right? You bought a fidget spinner business and now no one wants fidget spinners anymore. For example, I mean, like if that happens, and they're like, I'm not sure there's much you can do.
Yes.
Right. But otherwise, hopefully there's room to recover the business if you make a mistake.
I want to ask you one last question as part of our time together today. Talk to me about some of the favorite software tools or SaaS services that you're using to help support the running of all these businesses.
Yeah, I mean, we use we use Helium 10, like most guys, Viral Launch, Jungle Scout. We use those guys like a lot of other guys do. Some of our other back-end infrastructure is being overhauled. So I can't say too much about it at the moment. We've just had a new CTO join us, and so we're doing a bunch of work on that stuff. But I tell you, armed with a good accounting system, and you can use Xero or QuickBooks or whatever. I mean, armed with a decent accounting service, and Jungle Scout and Helium 10, for example. There's a lot you can do. We were using Seller Cloud as well as our ERP, which is very nimble and can do a lot. I mean, it's not super user friendly, but it can do pretty much anything. And we've used in our reselling business, we use Seller Snap, which I thought was great, which is our repricing software. So I think that's been a great piece of software. Yeah.
That's great. Well, Ryan, I want to thank you today for joining us on the BuyBox Experts podcast. For those of you who are interested in learning more about Recon Brands, please visit reconbrands.com.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.